is Monday, January 13th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. Today's guests are Steve Freed, Vice President of Grain Research at ADMIS, and Alan Bush, ADM Investor Services Senior Financial Economist. Steve, let's start with the grain markets this morning. What did the USDA report say on Friday, and how has the market reacted?
It was a very boring report. The USDA really didn't change much. In fact, instead of lowering the 2019 corn and bean crops, they raised them a smidgen. The stocks on December 1 were a little bit lower for the wheat and corn than expected. Beans were a little bit higher, but no real big market reaction. And then they really didn't come in as expected, and WASI didn't increase any U.S. exports because of the signing of this deal. So basically we did nothing all day. We kind of closed a little firmer in anticipation that the market might rally into a deal signing.
What do you think the grains will do now, Steve?
I think they're going to stay in a trading range. I think that today the market is trading like maybe China won't buy anytime soon, at least in the grains. And so, you know, we're looking for some type of rally, maybe pre-signing, post-signing, whatever, maybe to sell some cash because 2020 looks a little negative.
Looks like phase one of the U.S.-China agreement will be signed this week, hopefully. How will the market react to that?
Well, the market is skeptical because, you know, you're talking about a time frame in which in 2012, the most China ever bought from U.S. ag goods was $27 billion. And now they're expected to come in by $40 billion. So, you know, there might be a little Chinese buying of beans and pork showing a gesture after the signing and in front of their lunar holiday. But I think in general the market is concerned that this might go over a long period of time. So basically we're just going to be sitting here waiting every Monday morning to see if they bought something, if the cash is firm, if spreads are narrowing, and if the futures react to it. And the funds continue to hold a short position in corn and probably even in the beans, and a long position in wheat.
Speaking of wheat, Steve, you see a lot in the news about the Australian wildfires now supposedly have burnt up an area the size of the state of Indiana. Will it affect the world wheat stocks in any way?
The wheat market has rallied since September, and I think one of the things that we've rallied is the tightening of supplies here in the United States, in Europe, and maybe a little bit in Australia. But the problem is that Australia is a small percentage of the global wheat production, and their exports are a small percentage of global exports. So while it's a domestic disaster inside of Australia, if Europe crops come back in 2020, if Russia, Black Sea has good crops, if we have good crops, it may not make a difference from a price standpoint.
Alan, let's turn to the financial markets. Last year there was talk of a weaker U.S. economy. What is the outlook for the U.S. economy now in 2020?
Well, first of all, last year there was a portion of the yield curve was inverted. That was in the first part of 2019. So there was a lot of talk about the weaker economy, and in fact the economy did weaken to some degree. But all that appears to have changed now with the yield curve becoming normal again. And a normal economy is consistent with growing GDP. And in fact now it looks like the GDP in the fourth quarter for the U.S. is likely to come in at 2.4%. In fact, I think there's a chance of even better, maybe 2.5%.
Speaking of GDP, a weak UK GDP report suggests the Bank of England will probably lower its key interest rate this year by 25 basis points.
Right.
How will a rate cut from the Bank of England affect other central banks?
Well, there's a saying that interest rates are fungible in a sense, and that's a very broad sense, but it would tend to put downward pressure on interest rates globally. So it appears that with that in mind, the ECB may have to maintain their accommodation for longer. And in fact, the Fed here is likely to lower rates at their December meeting. In fact, there's a 55% chance of a rate cut at that meeting.
Final question, Al. Will stock index futures make another round of historical highs before the end of the month?
Yes, I think they will, which that may not be saying that much since we're not that far from historical highs now. So there could be several periods, several days of new historical highs. The fundamentals still seem to be friendly. Interest rates are low. Some of the geopolitical issues are lessened to some degree. So I'm looking for higher prices through January and following through also in the first part of February.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland Company. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.